joining us today. We know everyone is busy and has lots going on. It's the summer, but we do appreciate you spending the time with us today. We have a really fantastic conversation planned for you. The title of the webinar is Clicks and Capital, Turning E-commerce Success into Thriving Exits. We have an absolutely fantastic group of people here to sort of lead this conversation, and I couldn't be more excited. This is a little bit of a different format than we've used in the past. This is a 90-minute format. So we're going to spend about 45 minutes having a discussion with our panelists, and then we've reserved about 45 minutes for questions and answers. We anticipated that just given the topic, there would be a lot of questions. So we wanted to make sure we had enough time to address everyone's questions. So some of you submitted questions at registration, and we'll tackle a few of those. But also on the chat panel to your right of your screen, you can submit questions throughout the conversation. You can use the Q&A tab to submit questions, or you can use the chat tab. If you submit a question to the chat tab and that question disappears, it's not because it's lost. It's because we've moved it into the Q&A tab. So fear not, we will see your question, and we will hopefully have the time to address it toward the end. This is meant to be conversational, and you're a part of the conversation. So please use the chat function throughout. Please also just keep the chat and the questions relevant to the topic at hand. Very quickly, I have a couple of announcements to start off with. So first and foremost, I'm going to be referencing some statistics from our upcoming Q2 investment and M&A report. That report will be released on August 6th. If you're a professional member, it's included with your membership. If you're a premium member, you can get a 15% discount on that report. And again, that's coming out on August 6th. Next, we're also going to be talking the investment landscape at our next summit in Los Angeles on October 24th. And tickets are currently available. If you're interested in joining us for that, we'll put a link into the chat. Again, if you're a member, you'll get a 10% discount on tickets. So first, I want to thank our sponsor for today. So today's discussion is presented in partnership with Fortunet. Fortunet is an e-commerce focused investment bank, and they specialize in guiding successful e-commerce first brands, as well as e-commerce SaaS and service providers through their exit journey. And clearly their expertise in this space has made them the perfect partner to help us dig deep on this topic. So let's jump right in. So e-commerce has become one of the most important drivers for growth in the beauty industry, and investors have certainly taken notice. As a result, we've seen a whole new ecosystem of capital sources and acquisition platforms emerge, and they're squarely focused on digital selling, which has supplemented sort of the more traditional venture capital and private equity community here in the beauty space. So we're going to use this conversation to discuss what it takes to thrive in the digital space today, and also glean some insights on the strategies of sort of the best digital beauty brands that are used, and some of those strategies that brands are using to attract investors and, of course, maximize value at exit. Let me introduce our panelists. So we're joined today by Michal Baumwald Oron. She's the CEO and co-founder of Fortunet. Thank you for being here, Michal. Amber Weinfurtner, she's the SVP of Global Sales at Lawless Beauty. And Chad Annis, a face that might look familiar to you because he's joined us a few times. He's the founder of Market Defense. So let's jump right in. Michal, let's start with you. In today's omnichannel beauty landscape, essentially every brand is an e-commerce brand, right? In fact, according to Statista, almost 28% of U.S. beauty and personal care sales in the U.S. In 2024 will take place online. And globally, beauty e-commerce sales now exceed those of specialty retail. How do investors and strategics think about e-commerce in the context of M&A today?
So first, hi, and yes, e-commerce has become a mainstream investment interest and a key industry sector for investors and of course for strategics. And the e-commerce has a major role in consumer product M&A altogether. As you mentioned, it's if we're talking about consumer product, then we're talking also about e-commerce. And why is it so important for an M&A, and why investors are expecting to see an e-commerce active and successful channel? So just several examples. One is scalability, of course. That's e-commerce allows for a rapid and efficient scalability at relatively low risk. There is the part of the consumer engagement, which adds so much value to the brand development and the ability to leverage those direct relationship with consumers to support the ongoing long-term growth of a brand. The relatively lower risk of performance, which comes with the healthy cash flow, which is related to e-commerce activity, is also something which is very supportive of a thriving brand. E-commerce is a common and accessible manner to reach globally and to penetrate other markets relatively easily, and also it allows to measure the brand equity on real time. So if in the past you have a brand, you need to prove what is the strength of it by different surveys. And now, on time, you can measure how strong is your brand, and this gives a lot of comfort also to buyers and investors, and an ability to project for the future. So e-commerce is important as to the brands themselves, also to buyers.
Yeah, and how does e-commerce impact exit multiples and valuation? Obviously, a question that's on the mind of anyone who's out in the market today or thinking about going out in the market.
So valuation, it's always a combination of calculating past performance and future projection. And when you look at the future, then of course, a successful e-commerce channel can support higher brand valuation as it supports its growth. And it comes with high growth potential, a lot of scalability. In order to scale up a business based on an e-commerce channel, sometimes you can maintain a very, very lean headcount and organization, and at the same time grow so much. So this, of course, supports scalability, but also profit margins, which are also very important when you evaluate a business. The revenue predictability assists in creating those projections very efficiently. Such predictability can be the result of subscriptions or email marketing and the actual, connections with the direct connections with the consumers. The fact that there is no dependency on a small number of retail parties, it's also a benefit, and the diversification by itself. It's a great supporter. So with all those considerations and many others that are related to e-commerce, in many cases, if those who were able to crack the code of the e-commerce channel will benefit from a higher valuation related to the brand.
Yeah, for sure. Just putting my my former private equity hat on for a second. It's really funny the valuations that are ascribed to businesses today that do have that huge sort of retailer concentration risk. I totally agree, Michal. I think that having a diversity of channels and a diversity of revenues really does get investors comfortable paying a premium. Amber, let's jump to you. So you've been an advisor or a part of the team at brands as diverse as Chanel, Supergoop, Good Light Cosmetics, and now Lawless. Can you share with us some insights on the evolution of how brands are balancing their e-commerce strategies with other channel strategies? So for example, like their physical retail strategies, all sort of with that goal to create that flywheel effect where all channels are growing symbiotically.
Yes, definitely. I think when you're thinking about a really strong channel mix, it's thinking of things in a third and a third and a third, or at least having that three-legged stool so that at any point in time, if something knocks out, you have something you're falling back on. So when you think back to everything that happened in 2020, having really strong e-commerce relationships, both in wholesale and own channels and on platforms such as Amazon, you could really like maneuver and meet the consumer where they wanted to be met at that point in time. But then we've seen a shift in the last probably year or so that people are incredibly excited to be back in person, especially in the beauty industry where they can touch, feel, try things. Color cosmetics happen to be one where people really want to be able to feel the textures and play with it. It's an instant gratification buy. So we're seeing the stores are becoming all that more important. So when you're thinking about who you're partnering with and the strength of that, it's knowing that at any point in time, your business could come through one of those particular channels. And if you're well diversified across your portfolio, you can lean into the ones that are resonating with the consumer. And again, it comes back to meeting them where they want to shop. So whether that's online, on, in brick and mortar, wherever that may be, on social, I think that's the real key to having a strong, healthy business, because that's where the profit margin comes in. As long as you're making sure that you're not just paying to play all the time and mixing that up.
Yeah, for sure. Speaking of the three-legged stool, Chad, let's talk about Amazon. So you've been on with us a number of times.
Never heard of it.
Never heard of it, I'm sure. You've been on with us a number of times to sort of, shed some light on how brands can maximize their presence on Amazon and turn it into sort of a high growth, profitable sales channel. But Amazon has evolved as a channel, in particular in the eyes of investors. How has investor thinking around Amazon evolved over the years? And, are they still applying a valuation discount to brands that over-index on Amazon sales?
First of all, thanks for having me. I don't think they are any longer reducing multiples because you may have 25 or 30% of your sales on Amazon. It depends on the investor group, of course, but what they want are steady and up and to the right revenues and profits. So if you can get that, now, of course, if you over-index it, I don't know, 40 or 50% of your revenue, and then you're going to get hit no matter what channel I think that is. But if you keep it in that 15 to 20 to 25% range, you're right there where most investors that I know really want you to be, and you can turn it up and down these days like you couldn't before. We used to use a metric of when we would do an audit. And by the way, I'm no longer running market defense. We sold that to some nice folks that are doing a good job. So just so we're clear. But when we were looking at auditing a brand, we would ask them to give us, some data, and we wanted to find out how much of their revenue was on Amazon. And if it was under 7 or 8%, we knew there was a lot of headroom for them. And we would tell them that if you got to 10 or 12%, and this is 4 or 5 years ago, pre-COVID, you were pretty much where you needed it to be. Post-COVID, 10% became the baseline, and we had brands of Drunk Elephant, Tatcha, Dry Bar, First Aid Beauty, who would have up to 20 or 25% of their revenues after we were done optimizing them on the channel at super nice profits, because we were focusing on the results and not just bottom of the funnel. We were really doing some brand recognition as well. So I would recommend those that are listening to this, looking to see, well, what are some of the formulaic things that I can do, some recipe stuff it's always dangerous to share it. But if you're at less than 10% of your revenue on Amazon, you're failing in my world. And if you're over 30%, you should probably pick up the phone and talk to Amber about getting you into some retail locations, because that's not going to work very well.
Yeah, and not to go off script at all, Chad, but I also think it's really important for brands to have a good Amazon strategy to support the rest of the ecosystem as well. Because if you're not selling on Amazon, chances are someone else is selling you on Amazon, and that could sort of corrupt the overall sort of sales ecosystem.
Oh, Amazon is a total proxy for how good a brand is doing. You can't hide reviews, results. If you have 4.5 to 5-star rating, you're doing fine. If you have FBA scores above 650, you're doing fantastic. That means you're delivering. And it's really a proxy to going into some of these places where you may not have the strongest relationships, Macy's and Nordstrom's and Ulta, Sephora, and say, look at what I'm doing on Amazon. And that'll open their eyes. Those buyers will start taking a look. Most of them know who the bigger brands are anyway, but they may not track what you're doing. And if you can't move the needle in another channel and can move it on Amazon, it's probably the biggest bang for the buck going right now, quickly. That's one way to get investors and buyers to pay attention.
Yeah, for sure. So in our upcoming Q2 beauty investment and M&A report, we'll be showing that beauty deals declined 23.5% in Q2. So it's a pretty steep decline. The most notable thing is that growth deals, meaning venture-backed deals and minority investments, sort of declined to the lowest level since the inception of our BeautyMatter deal index. So I think we tracked 16 deals. The average for the last 15 quarters was 44 growth deals per quarter. So it's a pretty steep decline sort of on the growth side. Michal, what are you seeing in the marketplace in terms of appetite for new deals? And what are some of the characteristics of the brands that continue to catch the attention of acquirers?
So first, you are correct. I mean, and we cannot argue with statistics. Investors are more selective, and they are focusing on high quality assets. And it's a good question. What are those? There is still a good number of deals, but of course not everyone can find investors these days or can sell their brands. So which are the brands that will be more attracting? I think that first we should look at the brand identity itself. Brands that come with a good story behind them. If we're talking about drunk elephants, so that they're trustworthy based on their promise about what ingredients are not included in the products, for example, that's a differentiator and help them promote or build their story all around that. So I think that this is an important component of a brand. Of course, profitability and strong growth, which should be demonstrated in parallel at the same time. So revenue growth without the profit alongside it, it's not enough. I think that brands are expected to be data-driven today in order to be able to attract buyers and investors. Data is available in so many ways today, and data analytics can be used, to swiftly adjust the business and optimize components of it to enhance the personalizations, sales promotions. So the control over data and its analytics is super important. Repeat clientele base, I mean, that's an important component as well, which is very much looked at. And also client diversification and of course, mix of different channels. So multi-channel is an important aspect of a brand today in order to be able to attract investors and buyers. Having said that, I don't think that it would be right to conclude that a brand that doesn't, tick all those boxes cannot excel with selling, it's with exiting, or with raising a capital investment.
Yeah.
This is a very general response.
Yeah, no, that's good. And in an environment where deals are taking longer to close, efficient cash flow management can be the critical factor to giving brands the resources that they need to continue driving growth while they're going through their process, or while they're looking for an appropriate suitor. How does the e-commerce business model help support cash flow in that respect?
It helps a lot. First, it comes with a faster cash conversion cycle. Usually the revenue collection is much faster, between days to 2 weeks. So this is super important mostly if you compare it to large retailers, and it is dramatic. And also the availability of other players support in cash flow, such as Meta and Google, that can support cash flow by improved payment terms for the right brands that they believe they should support. This comes with this brings a lot of strength to a business and the ability to grow it. Another aspect that supports cash flow for e-commerce is a lower overhead costs. We can see sometimes e-commerce brands, brands that are based on the e-commerce channels only, that generates, 40-50 million of revenue with 12-13 team members. So you can get fantastic results, and these businesses are super scalable without increasing the fixed cost. And also inventory management, since if you have an e-commerce operation, then you control the level of inventory that you believe that should be held to support your business. You should not necessarily adhere to requirements of the big boxes, and it allows you more flexibility and therefore support the cash flow of the business.
Yeah. So given that a sort of incredible list of reasons to have a very healthy e-com component to your business, from the perspective of a potential acquirer, in your experience, and this is a question for all of you, is there a golden ratio, quote unquote, of omnichannel mix that gets investors excited about a brand? Amber, maybe let's start.
I would say I can speak to that, having gone through an exit. I think one thing at that particular time in 21 to 22 that was really important was everything that we've talked about. It's profitability, it's growth, up and to the right, but it was also about having the right mix of business, back to that three-legged stool, where a third of the business is coming from your own D2C, a third of your business is coming from a pure player, most likely Amazon, so that you understand how it works, you have control over your brand, and you're really owning that messaging and understanding that person who's really coming for replenishment, going back to that repeat customer. I think that's something that we see a lot in that point of view. Sorry about that. And then also a third of it coming from wholesale. And then within wholesale, it's really a mix of what's happening on the e-com channel in your wholesale platform that you can.
There is a party there. Don't be shy about it.
I love teenagers. I'm glad they're out.
Teenagers. It's summertime. What can I say? You never know when they're going to walk through the door. So apologies for that. But back to the big piece, it's like even within your wholesale channel and having a retail partner is knowing how much of your business is online with them, but also in their brick and mortar. So when you really look at it, you do end up with a larger piece of the entire business online and in an e-commerce platform, if you really look at it from that perspective too.
Yeah, for sure. Chad, how about you?
So I am very opinionated in this area.
And that's why we love it.
I do not know of a single brand. And remember, when we were running Market Defense from early 13, 14 to my exit in 22, we had 7 of Sephora's top 10 brands. I had a front row seat to almost all those exits on the Amazon channel and on the D2C, because we were constantly fighting the brands over whether or not they should invest in their .com or whether they should invest in their Amazon. When we proved to them that they were getting way more bang for their buck on the Amazon channel, guess what happened to the people who were, literally weeks, months, a year away from exit? They said, wait a minute, we get how much of a multiple on revenue? Oh, so every dollar that we get on Amazon that gets booked to our P&L, because we own the store on Amazon, right? You're not selling to some agency that's going to buy from you and resell, so it goes onto their P&L. We get a 5x, a 10x on those dollars. So I believe the golden ratio for the brands that really hit it out of the park, I'm talking 300 million and up, or it was 20 to 25% on Amazon, 20 to 25% on their D2C, and 50% in some wholesale distribution world. Now, granted, we were retail focused, so we didn't have a lot of salon type brands. We had a few, but if you can, you're going to get very close if you do 25, 25, 50. And I'll just say this. If you are trying to exit and maximize the value that you've created, and sometimes it takes a decade to get there, and sometimes it takes longer, and sometimes these folks can do it in 5 years. The biggest lever, I keep saying it over and over again, that I've ever seen is not giving an exclusive to Sephora. We love Sephora. We love Ulta. We love those guys, but it's not giving them an exclusive. Sometimes you have to do that to get in the door, okay? It is also not leaning into your D2C. Why? Your conversion rates on your .com, if you are genius level converting, are 3.5%, 4% consistently. Those are genius level conversion rates. Sometimes you'll pop up around 5 or 6 on a holiday or something, but it's usually 2 to 4% in that range, right? Amazon converts at 10 to 20% if you have the right people running your store. And on your previous question to Michal, one of the things that I think investors love to see is, are you efficient with your staff and administration? Why would you bring in people who are spread out across all sorts of different agendas and not use an outsourced agency if you're getting ready to exit? I've seen it over and over and over again. When we lost an account because they exited to Unilever or Johnson & Johnson, we rarely did, but when we did, the performance went down. So taking those dollars that you're spending on staff and software and legal and all the stuff you've got to do to be really, really good on Amazon, and just handing that over, saving money, and getting a pay for performance, results oriented agency to help you is killer way to, I don't know, get another. I'll give you an example. I won't give the name of the company, but they got an additional $12 million in the last year for leaning in to market defense, because we were doing such a good job. And it happens over and over and over again. And
I can back that up for Chad too, in that when you're thinking about all the operational lifting that happens when you're on a platform like Amazon, it's how your ASINs are put onto your product, or how you need to be bundled, or how things have to be packed out. If you're not at a certain scale, it's really key to have a really great partner that can help you navigate that, because it's so many little things that can knock you off of Amazon from a listing point of view, or get you into hot water operationally. That's why I'm a very big believer in the 3P partner system.
Yeah. Totally. We're going to jump. I actually want to jump a little bit more into that topic in just a second. But before we do, Michal, do you have an opinion on, sort of a golden ratio of omnichannel mix that gets investors excited?
Yeah. So first, I don't want to argue with Chad. I mean, I'm not brave enough, but maybe, maybe just to add two perspectives to that. One, there are brands that are online first brands that remained e-commerce brands only, and they're doing amazingly well. One of the most, I think, inspiring examples is Oddity. I mean, that's an e-commerce only beauty business that we can all, look at them and learn. And there are, of course, many other smallers that are doing a great job. So I'm not sure. I mean, it's nice, of course, if you can excel on different channels, you should pursue them and of course have a more diversified business. To me, it's it's more than a golden ratio. First, you need to have a significant enough of stake at each channel. So don't waste your time with selling, 3% of, revenue in some channel unless you see real potential there. So this is one thing. The other thing is that you should grow on all channels. This is even more important than the ratio itself. Okay, you can sell on brick and mortars and then Amazon and D2C or whatever, as long as you grow them. And maybe my last comment would be the channel synergies. So it is important to see synergies between the channel as opposed to a cannibalization within your own business. And of course, this can be achieved with the right work. I do agree with what Amber and Chad mentioned about the level of proficiency which is required, to manage sales in different channels, of course, and getting assisted by experts for Amazon. Also, D2C, it's important.
Okay. Yeah.
Synergy is a good word to use in that. When you are spending, I think we'll probably talk about this, but media spend is such a large part of everybody's budget. And it's such everyone's hot button on attribution and how you want to calculate that. And everyone's got some other way of thinking about it. But at the end of the day, if things are working, all your channels grow when you invest in that way. And I think that's that synergy piece, like you were saying.
Yeah.
And thank you, Amber. That is the perfect transition to sort of the next point I wanted to go, which is profitability or path to profitability. It's consistently mentioned by deal makers as sort of the critical ingredient for getting a deal done in today's environment. But of course, over the last few years with changes to things like iOS and an increasingly sort of crowded digital marketing environment, customer acquisition costs online has skyrocketed, and it sort of put a lot of pressure on profitability. So Chad, coming to you first, Amazon has rolled out a powerful suite of marketing tools over the last few years to help brands drive growth. How are savvy brands utilizing Amazon's native marketing tools to drive growth, but profitable growth?
So it is a team effort. I don't want to leave anyone with the impression that you shouldn't have an e-com team. You just shouldn't have an Amazon dedicated guy, gal, or team. Those folks should be focused on driving brand awareness, but then where do you convert that sale? Do you convert it on your .com that's doing 3 or 4%, or do you push them over to Amazon where they can get 12 or 15% pretty regularly? Where are you going to get 15% conversion rates? You're not. That's why Amazon exists. That's why they're so good. Yes, you make more profit over at your .com on a product by product basis, but at the end of the month, I've never seen a brand who spent the same amount of money on Amazon advertising, new tools such as video ads, streaming ads. And who knows the customer better than Alexa? I mean, they're listening all the time. They're watching you. They know exactly what they're doing. And they literally know their customers better than almost the brand does themselves. So they're able to chase you around the internet, chase you around your phone, and be at the place where you're ready to make a move. There's all kinds of profitable levers when you decide to use an Amazon type play to move the needle up. The number one mistake I see brands making is they put too many products on Amazon to start. Right? If you have 40 SKUs, congratulations. Nobody cares above SKU 15. Right? The CFO doesn't care. Maybe the founder cares. Maybe the creative guy cares because he's got a stake in it. Bezos doesn't care. Agencies don't care. Why? Because the top 5 or 6 SKUs drive the entire revenue stream. And if you're trying to exit, that's what the game is. if you're trying to create an alternative to whatever, I had an opportunity to do a deep dive on the Aveda folks not long ago, and holy cow, did they have some SKUs, right? But SKU selection is big. At the right moment, 3 to 6 months in, 6 to 9 months in, really take a look at subscribe and save. Don't do that until you're ready to move that next, catch the next gear. And then content and images are something that I think a lot of brands discount, right? If you can do the content, if you go to an Amazon advertising tool and it doesn't look as beautiful as your .com or as beautiful as your social media, you need to get a different agency, or you need to get a different person in that seat. It needs to be seamless. And I think Amber brought it up. Bundling is the best way to get average order values up on Amazon, period. And people love bundling. So storefronts and images. And then the last thing I would say is those folks who know how to organically get you momentum on Amazon, which is a slower way. It's you know, it's a more top of the funnel kind of a thing. You spend less money long term on Amazon. I'll give you an example. I'm connected closely with a few of my ex-buddies in the agency world, and I was asked on how Prime Day was going. And I said, give me an example of like one of your best. And this group of people is fantastic. Give me an example of what you're able to do. He said, all I could get them to do was increase their advertising 50% from their day-to-day, right? Just day-to-day increase for the Prime Day. It's not like 3 days, right? So Prime 3 day, they had a 9x increase in their sales. That's what you need to do. Yeah. So profitability, also, I'll say it again. They drove a bunch of advertising off of TikTok onto Amazon instead of trying to convert it there or convert it to their .com. And so they see across all those channels, retail, D2C, social, and they play a game that is very sophisticated, and they play well with the brand on all those channels. To me, I'll restate it. It's TV advertising, streaming, sponsored videos, product selection, content and images, and for goodness sake, do not send your social media traffic to your .com, please. It's a black hole.
Yeah, I want to dig in. I mean, I'm fascinated by the sort of conversation around conversion rates. So quickly before I move on to the next question, I wanted to sort of dig into that. Why do you think Amazon? I have some ideas, but why do you think Amazon has such impressive sort of conversion rates? Is it the Prime thing, or
you know what? I'm going to let Amber answer that because she's been at it when she was with Beauty Blender. She saw it, and she was the Sephora girl at Beauty Blender. And so she's seen it across multiple brands, small and large.
Yep. I really think what happens is that your D2C, and I think this has been an evolution over the last probably 8 years, where the consumer is going to go to your D2C to learn about the brand. So it becomes your flagship. Like, you need to put your best foot forward, tell your story, hook in with them, have all the details. But there's just the ease and convenience of going to Amazon and you're filling up your cart with bread, baking powder, a new pair of tennis shoes, some new widget you heard about on TikTok. And by the way, all of your tried and true beauty products. And I think that goes back to what Chad was saying, that when you have 5 or 6 top SKUs, they become a replenishment piece. So you're harvesting your own demand on Amazon. So the more that you're building who you are and engaging and building your community off Amazon, I think that the bigger your Amazon opportunity can become, because there's just no friction. And I think that's become more and more what people have, gotten used to, so that you still have that person that wants to go to brick and mortar for discovery, to touch and feel and play and have some sort of experience, because I think people have been dying for that, especially post-COVID. But there's still the things that you don't even have to think about, that that you're going to put into your basket, and Amazon just makes it so easy.
Yeah. I'll give you my answer now that Amber, thank you for that, is the average Target.com, the average Target store has 17,000 items in it. Guess what the 2 to 3 day delivery is on the number of items Target.com gets you? 17,000. I wonder if that is a coincidence. Or are they using their stores to fulfill some of those places where they don't have big distribution, right? Walmart, I think the average order value across all of Walmart is less than $20. Raise your hand if you want to be in the grocery business. I don't. Amazon has over 3 million. Like the largest Walmart supercenter has something like 30,000 items. And Walmart.com's got 300 or 400, 400 or 500. It's been a minute, but it's in the, I would be surprised if it's even close to 1 million items. So to your point, which is what Amber's saying, it's the place to go. I called it 2 clicks in 2 minutes, get you products in 2 days, right? It's so easy. It's so frictionless. And they have so many items and selections that's just the default. And do we know anybody under 35 years old that wants to go to the mall or the grocery store or Costco? Or no, they don't want to go there. They want to open up their phone and their iPad and they click. So you're getting the cohort from what, 18 to 35 or 40 who default to online before they go, to a .com or a retail store.
Yeah. Well, and Amber, I know you. Go ahead. Sorry.
Just one comment. Maybe also, consumers know that they can rely upon Amazon in anything which is related to returns. The level, it's a very reliable platform. And in many cases, we see D2C brands that actually direct, they have the plugin to Amazon. So you enter the D2C website and find yourself, you prefer conclude this deal on Amazon. So probably that's one of the reasons.
Totally. Amber, you sort of already touched on this question, but I wanted you to sort of focus a little bit on the D2C side.
Yep.
Just like strategies that brands are using in keeping with this whole conversation around the importance of profitability to investors. What are some of the strategies brands are using to maximize, their digital ROI in the D2C channel?
When I think of some brands that I've done some consulting with that were D2C first, and had really their big growth and momentum there, and then spread out into wholesale and have opportunities to go onto Amazon maybe down the road. One of the biggest pieces of, that profit is being able to engage with that customer. I think thinking about knowing that customer when they're expecting to have an email, when they're ready for replenishment, what kind of subscription service that you might have, especially in the skincare world in particular, more so than even makeup, is one that you'll see you can really hone in on that and be able to talk to that customer, put things together as personalization gets better and the ability to afford that gets better with AI and so forth. That, if they've bought X, Y, and Z and the pace at which they buy that, here are the products that go with it. And being able to talk to them, I think, is incredibly important and helps with your profit, because as you're able to link those products to one another, you can get really clever on the back end if you want to and say, okay, this is one of our best profit margin products to add on to something that gives us lifetime value. Once they buy this, let's say it's a particular gloss or something, and they add something like a blush to it, they're yours forever. And then the basket quadruples over X amount of time. So I think when brands are thinking about their direct consumer, I think there's still a real important lever in knowing who that consumer is and what they're attracted to. I also think it's a place to test, and that you can really start to see how certain creative pieces drive people and how it links back. And I think that can help you in a broader ecosphere of omnichannel as you start to think about the different levers that you'll pull with your retail partners or in the Amazon ecosphere as well.
Yeah. And just sort of stealing a page out of the some of the best, physical retail sort of playbooks, loyalty, I think, is probably a really important way. I mean, you're spending so much to acquire that customer, you might as well try to keep them, right? So maybe loyalty programs, it's sort of like back to basics, isn't it?
It really is.
Yeah.
I think it's also important too when you're thinking about your marketing, because it's an opportunity to bring that entire cohort into something that's gotten bigger in the beauty atmosphere, which is pop-up shops. So the opportunity to invite them and have a surprise and delight moment in an interaction so that you really hook into the brand and build that community piece. if you don't have that D2C base that you're talking to on a regular basis that have some trust with you, it's really hard to pull them over from other channels into an environment like that that can be so branded.
Yeah. Let's switch gears for a second. So Michal, over the last few years, we've seen sort of this proliferation of, very digitally savvy investors and digital roll-up platforms that specialize in the acquisition of digitally native brands. What's the underlying thesis of these platforms, and how do brands benefit by becoming a part of a larger sort of e-commerce family of brands?
Yeah. So first of all, experience taught everyone that roll-up is not a magic that necessarily generate a success, let's say, but it comes with advantages, and this is the thesis behind it. I think that part of it is economies of scale. Two is the use of data, and use it for cross-selling opportunities, for enhancing the engagement with the consumers. And also the creation of a kind of a center of excellence in any aspects of the digital business. If you're a single brand and you need to kind of cover a 30-60 degrees of supply chain and product development, and then digital marketing and logistics and pricing and inventory management. So kind of rolling up different brands, learning the best from each, and then helping everyone to benefit from the accumulated knowledge of everything. When we're talking about indie brands, that's a huge benefit. Also, the access to growth capital. So by rolling up smaller brands, creating more solid and well-based business, it's easier, should be easier to raise money. And brands that are considering joining such roll-up companies, first, for them, in the right cases, that's just another exit opportunity. So these are active buyers. Then also enjoying. I mean, on the specific brand from this internal ecosystem which is being built by those roll-ups. That's an advantage. We see more and more such roll-ups becoming strategic in mind, so they will be very focused on specific fields and segments, and with that they are becoming real experts in what they're doing. So that's another benefit to be part of that. Yeah.
Let's talk about international. Michal, you mentioned this sort of as a strategy earlier. Proving a brand has legs in international markets can be a really important factor as brands, seek to find an acquirer and to sort of maximize valuation. And as you mentioned, e-com can be a relatively inexpensive way to do that. Chad, let's start with you. Amazon is sort of course, a dominant force here in the U.S., but how important is it overseas, and what are some other comparable marketplaces, around the world in key regions that warrant a brand's attention if they're looking to sort of use e-com and marketplaces to prove that they have legs internationally to an investor?
So Amazon's a great way to get into markets. I think there's 22 or 23 or 24 Amazon dot whatevers today. Mm-hmm. They have a global team that once you prove yourself in North America, they'll get behind you. They'll do translations for you in Europe and in Japan and in China. Not so much. They're not so interested in China, and I have a very strong opinion about China as well. India and Middle America or Central America. But really, I'm going to leave these conversations to Amber and Michal, but I didn't see a lot of extra juice being squeezed out of places other than Canada and the UK. Mm. Europe was very tricky because a lot of times these brands, had distribution kind of chopped up amongst different countries, and they owned the Amazon channel, or some of the online platforms. So it was very tough to get in there and move the needle unless you had, kind of your hand in the pocket of your distributor and could sprinkle some ad money around. So internationally, I think it's a story that has kind of come and gone. I just consulted with a very large, very well-known strategic who ended up going a few years ago into China, JD, Tmall, and Alibaba, and started selling around $50 million, $60 million within 2 years. And then third year, 70, 80. And by the end of the third year, they had $45 million with a gray market coming back into the US. Right? That's the problem. So Canada would be where I would lean into. UK would where I'd be leaning into. Europe, if you really have strong distribution partnerships there and can really have serious conversations about Amazon, I would avoid Central America, South America, the Asian Pacific, and let the strategic or the buyer or the investor that's buying you go there. I know that Native was a good example to Michal's point earlier, was a online brand only, right? And they got acquired, I think, by P&G, and that was an absolutely perfect partner. Why? They could put them into the retail stores. They could put them international. And it got to the point where one of their, or the CEO that I spoke to the last time I spoke to him was out of India, right? So they were very interested in those international markets, but Native didn't try to do that themselves. They found really strong, financially savvy partners and channels that could do that.
Yeah. And Michal, how important is this international proof of concept to potential acquirers? As Chad said, sometimes it's better to sort of leave that juice for the acquirer. But how important is it for brands to sort of have some data to substantiate that their brand has legs internationally when you're going into a process?
Yeah, so it all depends on the performance itself. Again, I don't think that there is one rule that's applicable to everyone. Focus is important. So if going internationally means losing focus on the main market or the main things that can generate growth, then it may be a mistake. E-commerce is indeed a relatively easy way to go internationally, and we have multiple examples like that with businesses that excel in the US, Canada, as Chad mentioned, UK, but also Japan and Europe, and sometimes Australia. These are all available channels. To do this with Amazon, it's probably the most easiest way to go internationally, but whether it is that important to investors or buyers, it all depends on how successful a brand is at everything that they do. I think that's again my main tip, I would say.
I would also say to piggyback on both of your comments is that making sure it's still profitable. International is extremely expensive, and finding that right partnership, whether that's Amazon or a different pure player, because there are some really strong ones out there, and whether or not you can go with distributors or without distributors, so that when you really look at the profitability of that particular channel, that it's strong. And I think it has to be just as strong within the portfolio. It can't be just that you can sell through and your retails are strong and you have an appetite there. I think you have to really be able to operate that channel in a way that makes sense for that to be additive.
Yeah. And Amber, while we're at it and while we're talking about profitability, how do brands build awareness in an international market to drive e-commerce growth? I mean, if you're taking your brand for the first time out of the US, people might not know who you are. You might have to sort of start from scratch.
Yeah. And so my experience has been less with the Amazon, what Chad's saying, and more with finding that right wholesale partner, because the wholesale partner already knows who the consumer is in that market and knows how to speak to them. And then being able to work your synergies with that right wholesale partner, so that retailer can help you understand the dynamics of that market. What are they most excited about? What are top sellers? How do they speak to that, particular consumer sect? So I think, in my experience, it's been find that right pure player from an e-com keeps the CapEx down, or try to keep your CapEx as low as possible because it's already so much more expensive from an international point of view with regulatory and registration and everything, but also leaning into that partner on how do we find who our customer is here? You have an inkling that that person might be there. And that comes kind of back to that first party data on your D2C. You may see it in searches, you may see it in people who've tried to order and ship internationally. But I think it really is helpful, depending on your size and scale and how much money you have to invest, to find that right partner that can do a little bit of that heavy lifting for you.
And Amazon can tell you, if you get onto their global team and find the right people, again, relationships, they can actually show you your branded search terms, your searchability, what the category's doing. And for anyone wanting to go with what Amber said, which I agree with 100%, just don't give your wholesale partners your Amazon or your online business. Keep that for yourself.
Yep.
Make a deal with them where you maybe share some of those revenues, because it does have a bit of a halo effect, but don't give them control of it, because then you end up with 14 different strategies and 14 different people. And if you want to keep the gray market down, my advice to the large strategic was start shipping this stuff yourself. Don't hand it over to your distribution partner, right? Make sure it ends up in the country that it's supposed to, and you control that yourself, and just give them a lower discount. Don't be lazy and say, oh, well, 65% off and you handle everything? Awesome. No, 50% off and my team will get it to you and get it through customs.
Sage advice. All right. Well, we've sort of run a few minutes over, but the conversation was so good that I wanted to make sure we covered everything. So let's finish up the conversation portion before jumping into some Q&A with some advice. What pointers would each of you give to brands that are contemplating, going to the market today, or perhaps have already embarked on a sale process? Michal, let's start with you.
So, maybe profitability would be my first one. Brand differentiation and identity, of course. Consumer retention metrics are super important. You should analyze them, know them, and leverage upon the relevant data. And multi-channel as achievable, and also prepare for due diligence. You plan to go to market kind of now. Don't underestimate this part of the process.
For sure. Amber, how about you? What advice would you give?
My number one would be focus on building a brand, because if you don't build a brand, what are you really going to sell? And so I think that's really important. I think people think of the end result versus the process of building that brand so that it is covetable and someone wants to have it. I think the other is what we were just saying, which is prepare with process. Putting your process in allows for creativity to happen. I know a lot of brands, when they're in that smaller stage, maybe 5 to 10 to 20, it's a little bit cowboy and rogue out there, but putting the right process in allows the team to know what's expected of them, because it's just as important to have the right team in place, which goes back to that you're building an actual brand, so that when it is time to go to market, you're really, truly prepared. And that's being ready for due diligence, which came back to having the right process in place earlier on.
Yeah, for sure.
Amber is practicing what she preaches. When she left Beauty Blender to go to Supergoop is not very big. And her and her team made one strategic difference to create a brand. And I think if I got this right, Amber, you correct me, you went from talking about sunscreen to talking about skincare.
Yep. That was
right?
a big
one little messaging switch, not even 5 degrees of difference, was able to get some traction and some storytelling. So creating brand. From my perspective, I've seen a lot of deals go sideways because the books weren't clean. They didn't do the work up front to make sure everything was squeaky. And I don't understand why people are scared to get on the phone with Michal and her partners and those types and start the process sooner. That's another thing I think a lot of people that I've talked to said, boy, if I could, I should have started this process. Okay, I wasn't ready, but a year or two before you think you're ready, is when you start these conversations, and they can put you in touch with actual investors and listen to them over a cup of tea, a Starbucks, a hamburger, about what is it you're looking for, what is it you're trying to do, and you get to see who Fortunet can maybe put you in touch with, or at least have informal conversations. And these investors will tell you. Now, I'm not saying it's snap your fingers easy to get in front of some of these people, but they will talk to you. They will get on at least a phone call, and they like to spread their tentacles out as well and say, well, who's the new up and coming? I want those relationships as well. So I would say, don't be afraid to swing and miss and ask 10 or 15 different people. I'll tell you another great group is John and Kelly at BeautyMatter. They know everybody. And if you get in good with them, they can make some introductions to you. But I think just practicing some of those conversations, you're not, you don't come across as so anxious or nervous. You kind of know what everybody's looking for, because for a year or two, you've started to have these conversations in a meaningful way.
Well, when you think about it, it actually is so interesting. I mean, you're investing your heart and your soul into building your business over the years, and you've gotten it to a point where now you're ready to sort of do something big and find a partner for it, or the next person to sort of take it to the next level. And how many meetings do you really have with someone in advance of signing on the dotted line, right? So getting the process started early,
yes.
A few years early, allows you to sort of know the players, allows you to sort of meet the strategics, allows you to meet the investors, obviously to meet your advisors. And then by the time you're sort of ready to sort of embark on the journey, the relationships are warm, and you haven't met them twice or three times before committing to partnering with them for the next 10 years.
And I've found that those that will sit down and talk to you, they'll be honest with you, like, we're not your investor, but I know a couple of people that are, and at the right moment they'll make that introduction.
Well, in meeting with, I think earlier, finding who your partner is going to be that's going to represent you. I think that's really important to have the right partnership there too. I think a lot of people don't maybe give that as much time as maybe they would have liked once they get into the depths of it.
Yeah. Well, Michal, we sort of already covered it, but I was going to end with sort of, when should a brand secure a banker if they're thinking about embarking?
Yeah. I think this was answered, of course, earlier in the planning, but maybe just to add to what was said here, I think that an advisor or a banker can really help also with kind of direct the business itself based on the business benchmark, based on their acquaintance with so many brands in the industry. So I think that this can be very much valuable, understanding exactly, besides of speaking with the investors and buyers, as Amber and Chad mentioned, but also based on analytics of so many brands. And also helping brands creating their projection, which is also an important aspect of this process. I think that a good banker can be very helpful with that. And then again, the market watch, understanding what are the trends, what is going on, who is looking for what and when. Sometimes it can end up with some very good opportunity, and otherwise just to be very well ready to the probably most important step in the brand's journey, handing it over to the next owner. So I agree.
Perfect. Well, on that note, let's jump into some questions. We have a lot of really good questions here. So I will pick a few. Let's see. So we have a couple of questions here about how to sort of factor in TikTok Shop into the mix. So we've talked about a bunch of different channels here. We didn't address TikTok Shop in particular, so I don't know who wants to take that one. But does anyone have any thoughts on how investors are thinking about TikTok Shop?
I can't speak to investors, but, kind of back to some conversations I've been having with people is, TikTok Shop is the QVC, HSN, or the broadcast, I should say, of a generation prior. And I don't think it's going away. I think people are going to continue. I have teenagers, as we just realized here earlier, but just the number of items that they keep in their basket in any one time, to be able to transact, and how influential that TikTok shop is. I think it's going to become more important in brand portfolios as we continue down this road to see, sort of what happens with that platform.
And then, and maybe just to add that, besides the TikTok shop, there is TikTok by itself, which it's a good place to source traffic to your DTC store, your Amazon, whatever. So this one shouldn't be ignored, I believe, and there is a huge opportunity there.
Yeah, it's really, so on BeautyMatter, actually in partnership with Market Defense for the last several years, we've been publishing a piece quarterly that talks about sort of the top 25 products on Amazon. And it is shocking to me how important TikTok is to driving the Amazon business. And I'm sure it also drives D2C, but it is so important.
And retailer. It's just important in the retailers now. I mean, when you think about your e-com channel at retail, or if you're just in a retail store and you watch people come in, they have their phone and they're watching the TikTok and they're trying to see where to find it.
Yeah.
That's how they're shopping. They're not reading the, gondola. They're not reading the graphic strips. They've had their phone out. It's really interesting. I love to go watch people for 10 or 15 minutes before I do anything and just step back and just watch the behaviors in a brick and mortar environment. It's very much one begets the other.
And a lot of people associate TikTok with sort of like these one-off viral moments, and it's sort of one and done. But I at least just going back specifically to this sort of like Amazon top 25 list, I remember when Michal rosemary mint hair oil sort of joined the list. It was because there was sort of a very large TikTok moment that sort of got everyone talking about it, and it was number one for several quarters. It's still in the top 5, and this is a couple of years later after that moment, and so it's not always one and done. Sort of when a moment starts on TikTok,
and you can find influencers very inexpensively. There's a lot of young people that for a few $100 a month, literally, like. Instead of giving an influencer 10 G's or 20 G's a month to go do something meaningful, take half that budget and spread it across 10, 18 to 28-year-olds and watch what happens. The last thing I would say is if you do TikTok and you're questioning whether or not you should convert it in the app or on your D2C or on Amazon, do a study and just for 1 or 2 months, take half of the traffic, and the right people that know how to do this will do this for you. And send half the traffic to your .com and half the traffic to Amazon and watch what happens.
Yeah.
And as an anecdote, it's worth mentioning that you should be ready to spikes in your business, if you go there. I have, one of our clients that experienced a spontaneous influencer kind of video that got 25 million views in a few days, and all his talk was eliminated in a few days. So this is also something to take into consideration.
Yeah, it's hard. It can be hard, right? You never know when it's going to happen. And
that goes back to profit and margins, right? Yeah. How many pieces of componentry should I have on hand if something like that happens, and how quickly can I get on the line in order to fill? So
that's where your partner relationships come into play for sure.
Yep. You were on Good Morning America, weren't you, Amber, recently?
Yeah. Yep.
And that was successful for like what, 10 minutes, 5 minutes? How long were you on there?
Not even that long. Yeah. It was really about getting the brand out and thinking that as a new way to seed into a new, captive audience for sure.
Yeah.
We've had a couple of questions here about premium brands. And so there's a question here specifically around, sort of the path for premium brands who want to expand digital sales channels, maybe onto Amazon. Do you guys have any thoughts about how premium brands sort of play? Maybe they have to play differently sort of in the digital space.
When I think of premium brands, I was at Chanel very long time ago when there was no D2C, and that wasn't something that was going to happen. You know, and Net-a-Porter was like the big .com moment for a brand like that. But I think one of the things that people are looking for is legitimacy. So if you're showing up on Amazon, you're showing up there whether you want to show up there or not. So if it can be in a way that still gives that premium experience. So back to what Chad was saying, do you look as good on your D2C as you do on Amazon, or on Amazon as your D2C, is extremely important, because I think that's the expectation of a customer with premium to luxury, that what you see, what you can experience on any of the platforms you may choose that are e-com, it needs to be one that really looks and feels consistent. And I think that consistency goes back to what we were talking about earlier, brand building, which is what premium and luxury brands do so well.
Do we like to read about luxury or watch videos about luxury? We like to watch videos. And so the more a luxury or premium brand can do some 30-second, 60-second, 90-second, really high quality, not expensive, but really high quality videos will separate them. And again, when you ask me the question about the new tools on Amazon, there are literally streaming ads now that Amazon can put you into. And those digital assets are way more important for a premium and luxury brand. When I owned my agency, that's all we did. We only did premium brands. And then there's, packaging. On your packaging, put a QR code that allows them to click on it, and then it jumps into a video, right? It's an experience. Some of the LVMH brands are doing near field communication, NFC, which is like a glorified RFID chip. It's not only eliminating a lot of counterfeit and gray market, but when you get near field and your phone pops up and says, hey, would you like to, you got this bag in your hand, would you like to see some things about it? Those are the things that the top luxury brands are doing. Now, I wouldn't say that someone doing $5 million a year in a premium beauty brand or $50 million a year in a premium beauty brand is going to go near field communication. But if you want to see the needle moved, it's more visual and active videos than it is, really anything else. Experience.
Yeah, for sure, that the experience is part of the premium nature of the brand, for sure. We're getting a couple of questions here about professional, so dermatologist dispense brands, maybe salon brands. How to take professional into sort of e-com. I know this is actually complicated, and we've spent a lot of time at BeautyMatter. In fact, at the last Next Summit in Los Angeles, I had some really incredible sort of professional brands. So like Dr. Dennis Gross Skincare, which of course also it has a diverse channel strategy. K18, which has a very sort of robust salon strategy, but also a diverse sort of retail strategy as well. How do brands that are professional brands jump into e-com? Is there anything that comes to mind? Because I know that there's sometimes like when you're a professional brand, like if you're a salon brand, your customer is like the hairstylist that might be selling product out of their studio, right? And so in some ways, there might be this feeling that like an Amazon or your D2C competes with that person. So how do you guys think about that?
Affiliate. It's the first thing I think of.
Right. You gotta find a bridge.
I think you've got to find the bridge. And when you think about all the ways that your professional group can be advocates for you and affiliates for you, I think that becomes really important. So if you're an esthetician, let's say, and you have a brand that is only in salons and is medical grade, or however they want to put it, and there's a doctor behind it, I think giving them the power to be your content creator and the ability for them to also make some money on that as well is really important. So that's why I keep thinking affiliate when you say that.
Yeah.
Put a camera in their face and start talking and polish it up and publish it on social, and then let QVC or HSN help you tell the story or something like that. You need a bridge to move off of, because I remember a dermatological brand in Houston or Dallas or something that was really, really strong in Texas, but just couldn't get anywhere else. And they didn't have a good partner on those doctors. Those doctors really liked the revenue for themselves. They weren't really helping. So selecting the right partners and making sure you've got someone who's sees a bigger vision than you versus, being afraid to step on some toes. You got to step on some toes. But yeah, it's back to everything's going streaming and videos and short snippets and TikTok-y kind of stuff. And if that partner in that professional world, that salon owner can get in front of the camera and then you can publish that and own that, give her or him a piece of it, win-win.
Yeah. I mean, essentially, Michal, go ahead.
No, sorry, please.
I was just going to say, essentially, as a professional brand, you have one of the most perfect sort of built-in, groups of influencers that engage with your brand, believe in your brand, sell your brand on the front line every single day. What better influencer to sort of integrate into your overall brand building than that person? It is a perfect sort of fit, isn't it?
The founder of Beauty Blender was a makeup artist in Hollywood, right?
Yes. Yep. She was on set, known for doing airbrush makeup. That was originally how she started. Yep.
And I'm sure, I don't know that story, but I'm sure she took one or two people that loved her and said, hey, help me out here. And that's how it launched, some famous or popular or well-known person.
And also it's the best, I think, brand story. I mean, you are serving professionals. So now it's the time for you to just give the access to all these goods to the vast clients or users. So I think that it's perfect. It's a perfect match. It's a better and easier start as a direct-to-consumer brand than just to start from scratch.
Yeah. We have a question here. So I think, so someone's asking about the best online platforms other than Amazon. And
they don't exist.
Probably right.
One of the things we sort of didn't touch as much on during the conversation was sort of marketplace opportunities, right? So maybe does anyone want to talk about the importance of these marketplaces that have sort of grown around our retailers and other places sort of in the distribution landscape?
When you say that, are you saying as thinking about our retail e-com as a marketplace in and of itself, such as like an Ulta and you're on their e-com and you're doing retail media? Is that?
Yeah. I mean, Walmart is essentially,
Yes,
a competitor to Amazon, maybe a little different, but essentially the same. And Ulta, Target is now sort of like making a big investment into their retail marketplace. So how do some of those fare, versus Amazon or as an additional channel to support the ecosystem?
I think it makes a difference on what your strategy is as a brand. There are brands that have a mix. So I think of some brands that live beautifully on Ulta, but also can live beautifully on Target. And they can really leverage those synergies because if they're going to play in a big way from a media point of view, they're going to be able to grow that media spend in a bigger way because again, that consumer is going to want to shop where they want to shop. So you can have Target, you can have Ulta, you could have Amazon because it's about a preference. I think if you're a more premium brand, it's a little trickier to think about this because it's how do you lean into your Sephora platform or your Ulta platform. And it gets a little tougher for the smaller brands in all honesty, because they don't have the budgets that the large legacy brands do. And I think that has been where the legacy brands have had a leg up in your prestige retailers, that they have the money to, really play on that as a true platform versus maybe what a brand that's a little bit smaller can.
Yeah.
I would say that if you're going to go on a marketplace that's not Amazon, you need to pick one or two of your favorite retailers like Amber's talking about. And even though I poo-poo a lot of, work in China, if that's where you want to go on all three, the ones I mentioned, JD, Tmall, and Alibaba. Don't just stick on one. Do the whole thing. I don't see why. I mean, they all want a decent size or Americanized brand, but in the first world countries, Amazon reigns supreme. You can't even begin to compare the dominance and eyeballs and conversions of Amazon that you can in second world countries, South America and Central America, Mercado Libre, some places in Japan and India. But again, these are drops in a bucket in an ocean of owned by Bezos.
But if a brand does think that this is for some reason the right way to go, then there are tools that kind of allow you to seamlessly list your products in different marketplaces at the same time. So maybe this is also something that should be looked at.
There's a really good agency called NetRush that has its own 3PL in just south of Cincinnati that's all automated and robotic. You go into the company like that has complete vertical integration from soup to nuts, they can take you into any international marketplace that you want. So if you're really interested, and I don't think, you can't be teeny tiny and go knock on their doors and get their attention, but you can be, small, middle-ish, upper, and those guys will pay attention to you. And there's other agencies that are like that they can help you control your inventory and move that stuff around. But I think we lose sight sometimes of how important the logistics are, and you can spread your inventories around so much. Finding some help with someone who has a centralized inventory program and can get you into other places, even though they may be a little more expensive. You have one spot to feed Macy's or feed your D2C or feed Amazon. That's a big deal.
Yeah, for sure. We have a question from Lindsay. It says, what e-commerce behaviors are you seeing from the 35 plus market, e.g. older millennials, Gen X, and boomers in beauty? Someone who identifies as one of those. I'm curious to know, do you guys have any thoughts on how e-commerce strategy might need to be adapted to sort of connect with the 35 plus market?
Well, I think there's some life changes that are happening for that group, right? They're digitally native mostly, like the furthest along of any group. And I think that as their life and needs from age 35 on are happening, they're at the height of their careers or the career boom. Maybe they've chosen to become parents around this time with small children. So I think when you're talking to that particular group, it's finding out where they are in their own life cycle and meeting those needs. And a lot of the time it's convenience. They're probably one of the most time-strapped group of people. And I think that it's really important to keep that in mind when you're thinking about meeting them where they want to shop and how they want to shop.
They may be open to hear or to listen to some ads, quiet in the dark, telling them about their skin getting older and that there are great solutions just by a distance of a click. So this is an audience that should that is a good fit for that.
For sure. We at BeautyMatter, we spent some time last year during our Future 50 with Jones Road with Bobby Brown's brand and her brilliant CMO, Cody Flocker. And I thought this was so cool. I mean, they are really sort of going after that, older consumer, the Gen X consumer that is often under, penetrated when it comes to, brands targeting them. And there is some efficiency to that. We talked about, profitability and ROI of marketing spend. There is some efficiency, to not be another brand that's competing for that Gen Z eyeball, right? And, to be competing in a space where there may be less ad spend. That's sort of it's sort of an interesting way to drive ROI on your marketing spend. Yeah, I think. Oh, we have one more question here. Somewhat related, but what e-com strategies are people using to talk to men?
Yeah, I can share a bit from our experience. So maybe first, it's interesting it should be taken into account that when you're talking with men, sometimes you're talking with the women. So that's the way to get to their heart. This is important. And then another thing is that in many cases they will be up to more tended towards subscription, because if they're happy with their product, then it will be the easiest thing to just order it again and again. This is from a true story.
Yeah, it's funny. I remember back in like 2008, I read a report that said we are finally in the age of selling skincare products to men. And men's has been a little bit of a tough category for some time. There are definitely some brands that have done a fantastic job connecting and building a business that's sort of exclusively focused on selling to guys. But it's been a tough business. Now we're starting to see a lot of reports that are saying we're finally at a place where we're going to start selling skincare to men. In fact, I just read an interesting report where it was considered sort of one of the top trends for e-com. And fragrance, of course, is the most dominant. Skincare, and then color cosmetics was one of the other categories that was most talked about in terms of selling to men. So, versus 2007 and 2008, totally different sort of mindset around selling to men. But maybe we're there. Maybe this is the place where we're going to start to see a whole bunch of men's brands proliferate, in particular on the e-com side.
We had experience with Jack Black and then True Fit and Hill. True Fit and Hill is the oldest men's brand in the world out of Great Britain. Both of those had a very strong response when they upped their sampling program. When they were doing, when they would send them product that they had discovered or found them and say, listen, we're just going to send you some travel, packs of this stuff. Jack Black especially did such a great job with their sampling and kind of freebie giveaway stuff to get people hooked. That's a good way, because to Michal's point, once a guy figures out I like this, he's not going to go shop 4 other things or 5 other things. He's just going to go, I like that. Let's do that.
So there you go.
And John, per your comment, we know, I know personally a very large cosmetic plant that actually, develop products specifically for men. They see a huge growth in this segment.
So interesting. Well, I'm looking forward to it. Well, I think with that, I think we're about at time. So I want to, of course, start by saying thank you to all of you, Michal, Amber, Chad. You guys have been absolutely fantastic and so generous in sharing your knowledge today with our audience. For everyone that's joined us and stuck around to the end, thank you so much for joining us and for being with us. We will be sending around a on-demand email tomorrow with a link to this. If you'd like to rewatch it, take some notes, share it with a friend. That will be available tomorrow. So with that, thanks again. And yeah, I hope everyone has a fantastic rest of their day.
Thanks.
Thank you very much.
Bye.
Take care.